So Dr. George Elomi was the first person to speak in that report, was then the executive vice chairman. Now he's the incoming president of Afreximbank. Obviously, on the third day, he was still the executive vice president, but now he's the incoming president of the bank, Dr. George Elomi. And other conversations that took place last week at the Afreximbank meeting is the issue of preferred credit status. So we've been talking about the formation of the Africa Credit Rating Agency, which is supposed to boost the status of African countries especially, and then looking inwards to the multinationals or multinational financials on the continent in Africa. Of course, that was also part of it. So I had to sit down with Purdy Crawford Chair in Business Law, Professor Olabisi Akikugbe. He was on one of the panels having this conversation, so I decided to extract more from that with him during this sit-down interview.
I think right, you rightly said the panel I was on was on African multilateral financial institutions. And part of the conversations that we had truly straddled two issues on the preferred creditor status question of African multilateral financial institutions, but also the credit rating troubles or challenges that a number of African financial institutions in African countries have been facing. So to go with the first one, which is the preferred credit status, that's a question that's really centered around a debate between African multilateral financial institutions like Afreximbank, Trade and Development Bank, amongst others, and then the Bretton Woods institutions, right, your IMF and your World Bank. And primarily, the argument on the side of the World Bank and IMF and other creditors that lend to African states is that an institution, a financial institution, is only gets a preferred creditor status if they are recognized as such by other creditors, right? For African multilateral financial institutions like Afreximbank, their own argument is simple. Our governments are sovereign in creating the treaty that established us, entrenched this, wrote this into the agreement, and therefore we're sorry, we have preferred credit status already. What that means is that you would have to characterize the loans that we give to these countries as part of the ranking loans that you'll have to pay. We don't take haircuts when it comes to restructuring of loans, right? And that's an issue which I think, as the panel also highlighted, from African-centered development perspective, is critical to the existence of these financial institutions. If you think about it, the recent trouble between Ghana, Finch, and the rating they did of Afreximbank, right, was in fact written that they may characterize Afreximbank's loan as junk, potentially. Right? Of course, they've refuted that and they've written their statement. But if you think about that, what it means to an institution like Afreximbank to be characterized as such, or the rate at which loans will be procured by Ghana, which will be more expensive, they all come together, right, to create a bigger problem around the global financial architecture. But more importantly, it goes to the point of centering the role of African multilateral financial institutions, of which there's now an alliance of African multilateral financial institutions as well. So that's where we came from. The African Peer Review Mechanism and the African Credit Rating Agency is doing a very important work of making sure that agency gets off the ground and run very well. And I have no doubt, I think it will do that work very well. But there's also the fact that, more generally speaking, African financial institutions, more than ever, are driving the course of development of the continent, and we should not let anything distract from that goal.
Well, we're talking about African financial institutions. We seem to be raising hope and all of that, and Africa rating agencies. But can we say that we have the foundation already for us to start having these conversations, and not just because we are pushed to it?
The point is, these are all processes that have to run simultaneously. What we want to avoid is that in arguments about the reform of the global financial architecture, you don't want to inadvertently entrench a structural problem, right? What we're dealing with is structural in its nature, right? And so if we, for example, say we wait until when we have reformed the global financial architecture and not address other simultaneous issues, we will get there and we'll find out, oh, along the way we've probably led to the diminishing of the role of other core institutions. Where we are today in the world, the global system is stretched thin. There's the geopolitics of what is going on between the US and China and different parts of the world. What we're saying is that other institutions that used to hold true as those that drive the support, the funding that African states and others need, don't hold that any longer alone. There are regional development banks, multilateral development banks that are regional in nature that are doing important work. And so my argument, which I've made in writings, is that the reform of the multilateral financial institution is incomplete without a recognition, unfettered role of African or regional multilateral financial institutions. And that means you have to give them what they need to do the work they are doing, right? Which goes back to your first question around preferred creditor status as well. So in terms of thinking about, alternative rating agencies, protection of financial institutions on the continent, reform of the global financial architecture, addressing surcharge issues, they all run simultaneously. And the point is, we, African scholars, policy experts, NGO communities, must not leave one issue behind, right? We focus too much on the global and forget the regional. And by the time we're ready for the regional, it may be too late. That's what we're trying to avoid in this time.
So I guess we should say that charity begins at home. So let's deal with, our own complications and issues first. Have we started doing that, before we now put up all of this, putting everything together to try to solve the financial independence?
Yeah. Which is why I said, everything goes at the same pace. I think charity begins at home describes a part of it. Don't take actions that inadvertently hurt the steps that are being taken at home, right? When a state, an African state, even though it's a contractual issue, outrightly says, oh no, we're not going to treat the loans that we got from African multilateral financial institutions like Afrexim Bank as deserving of private creditor status, you are hurting the institution. You're saying you don't care. It has ramifications for how that institution will lend to other African states, if they will be able to do that. You see what I mean? At the same time, it doesn't mean we should close our eyes to what is going on globally, right? So you are right, there's a bit that is charity begins at home, but there's also part which is that it's a simultaneous process on which all hands must be on deck to support what everybody on the continent is doing in terms of what the AU, the African Peer Review Mechanism, the African Continental Free Trade Area Agreement, and African financial institutions, of which there is an alliance for African multilateral financial institutions, are all doing to make sure we move forward.
For an average African, I guess they'll say, where is the confidence in all of this, talking about Africa rating and all that? Because even before now, we've talked about the ECO, it hasn't really worked. AFCFTA, we haven't seen it working. Cross-border trading is still a challenge. Now we're talking about, depending on our financial institutions and also winning ourselves off the Western institutions. I wonder where the confidence that this will work is coming from.
Maybe until 30 years ago or 35 years ago, the dominant narrative is we're just creating different kinds of organizations and different kinds of institutions. That narrative is gradually changing. The past 35, 30 years in Africa's international institution building has given a totally different kind of reckoning from the past several years. So for example, let's look at the regional economic communities, right? When they were first set up, many of them were set up without dispute settlement resolutions, no courts, right? But reforms that happened in the 90s changed all of that. And whether it's in the East African community or the ECOWAS community, a lot has happened by the courts. if you look at a trade pattern, right, until again the 90s, the trend was that we don't trade with each other at all, right? The informal trading was not even accounted for. It's just failure everybody's talking about, right? But since then, people have written it, scholars have written about it. We trade in Africa. We just don't trade the way Europe trades, right? We still trade primary products, but you miss the informal economy that does more than that, right? It doesn't excuse the fact that we need to grow and trade more formally, for which we need to industrialize so that we can take advantage of value chain beyond just provision of raw materials. But we must also account for the modest progress that is happening along the way. If you put that aside, African financial institutions, their role in supporting these various initiatives, again, you look back at history, it looks like they haven't done anything at all. Some of them, not all of them, have been at the forefront, right, of trying to support initiatives. Pan-African payment systems, right? What the theme of this conference yesterday was all around, right? African trade and driving that resilience and what can be done, right? That narrative is changing. Does that mean we are where we want to get to? No, right? And so your question is, where should we look to for hope? I think we should look at the immediate 25, 30 years and see that our organizations are more intentional about what they're doing. Organizations like Afreximbank, like Trade and Development Bank, are putting their money where their mouth is. They are actually financing development-related projects, which will chart the course of the future, which will change the course of the future. That's where we need to focus on, right? And that's where I think we can draw inspiration in saying the vision we want of Africa 2063, the Agenda 2060, won't come if it's being financed by the EU. It won't come if it's being financed by the US or any other organization. And so this moment, the fracture in the global space for which some African financial institutions are stepping in must be embraced by African sovereigns to give them the support that they need to continue to do those things that they need to do. And I hope that's a trajectory that we'll continue to have.
While Africa is seeking independence, then we see a country like China presenting a no tariff policy. And we see Europe expanding to sub-Saharan Africa. Nigeria just became a shareholder in their bank not long ago. Would you say these are distractions, or would you say there are ways to capture these and accelerate our journey to financial independence?
I think the first place to start is that we're building our own financial institutions doesn't mean African sovereigns can't deal, right, with China or other, creditors, right? So the point is that you have another alternative source, one that cares about it, right? So if they get the basis upon which they go into those kind of deals right, then there's no problem, right? If, for example, with China, if the terms are known, if there's transparency around how those agreements are concluded, there's no problem, right? We can see that, we can assess it for what of it is, we can ask questions, right? However, if the attitude of our governments is to hide information about the loan they've gotten from China, only to then go to financial institutions, African financial institutions, and ask for more loan, then that means, I'm sorry, you're not even starting, right? Because then they don't have the basis around which to be sure the rates at which you've committed to, that you pay what you pay, would actually be met. And that's why we see instances of restructuring and defaults happening, quite apart from other exogenous factors that make that possible. So I think, if they engage with China on their own terms and go into those agreements very well, that's fantastic. If African states don't sign bilateral trade agreements that, open up their environments in a way that decimates it, that's fantastic, right? If they go into, climate finance and think about the environment in core ways, not commercially packaged agreements that's meant to siphon, right, the natural resources that they have, that is fine. And that's where we all have to continue, right, to ask the right questions of the governments around accountability, around transparency at the national level now, right, so that the roles of the financial institutions and other regional institutions can somewhat be easier as well when they're dealing with these states.
And when we finish all these great conversations and knowledge sharing and ideas, every African will go back home and have to deal with the political leaders. Um, are they really committed to make these work? Because it all starts from there.
Well, that's the sad reality. A lot of this, depends on that very much flogged phrase, political will. We need that to happen. The leaders must show that they really mean what they say by doing it. And so you're right. We hope that that's what a lot of African leaders will do, that they'll be bold, that they will know that, we need to build resilience in going into this next set of turbulent times in the global economic space. But also, as I've said in the past, the role of citizens and good advocacy, asking the right questions of government, not just at the federal level. Start from the ones that are closer to you. You can make them accountable, right? By engaging with the offices of your appointed representatives in a very civil way. And if that hasn't happened, go to court, right? These institutions are there. They would eventually come true, even though it grinds quite slowly, as they say of the wheels of justice.
So I can see that you're really excited about, all this issue of African financial institutions and the Africa credit rating agency. But I'm talking about the Africa Credit Rating Agency. How do we really make it work, devoid of sentiments that we've seen over the decades on the continent, and able to win the trust of not just Africans, but those outside the continent?
Number one is there's a need to have the right information out there. It's a world where between the AI, and platforms that have stopped fact-checking information, there's significant level of disinformation out there. It doesn't take much to just get it out there. So for institutions that care about the work they do on the continent, whether it's about establishing the credit rating agency, whether it's about Alliance for African Multilateral Financial Institutions, whether it's about the African Center for Disease Control, everything that happens under the auspices of the African Union and beyond, it is critical to provide right information. Sources that are relatable with the children of this age as well, right? Information delivered to them in a way that makes them understand that from the amount a government asked any creditor for, down to your daily living, you are paying a particular amount of what the interest rate will be eventually. And actually, you may also be denied of the infrastructure that you need if you don't stay with the government in the right way, right? So that's number one that I would say in that context. Good information made available to the citizens is critical. But number two is also to ask oneself, to the extent that we have all these institutions, this is a financial related conference, but I've mentioned the African Control for Disease Center, building that cohesion, building that, right? Fragmentation has happened in the context of trade agreements. At the time we just entered into the AFCFTA, Kenya started negotiation of a bilateral with the US. Now that has been put on the back burner. But the point here is that African leaders must not lose focus of the fact that the ideals of Pan-Africanism, which is where I'll go to, which has suffered a lot in the face of various economic and national interests, still holds true for this continent in many areas. And at times when all Africans are trying to be on the table to draw us further, right, into these areas, one hopes that, at the African Union level, at the various regional institutions level that make decisions, they think about Africa and its future at this moment. That's the only way, right? Think African, and at individual levels also hopefully buy African, dress African, and so on and so forth.